Hello, this is the Chart Profit video, Friday 19th of August. We're about an hour before the open actually. This from the pre-open graphic today. Looking at the E-mini S&P future, we're looking at the September contract. The 3-month point of control, which is our first level support down here. E-mini has been in quite a range recently with little directional commitment. We've seen no significant buying or selling for it's 20 days now, and as I wrote yesterday, this is an unusually long stretch. I wrote yesterday significant selling. Red is not marked soon. I would expect buyers to auction the E-mini higher. Has to hold the minor point of control, the 20-day at 2177.50. This level here. Current distribution actually suggests development up to 2220. Definitely want to see that level hold in the short term. If we see the E-mini below 2158.50 down here, time printed below that level would suggest weaker price location and further weakness in the market. You can see those two levels here on this live hourly chart, 2177.50, the minor point of control just being tested currently. We're just printing slightly below that pre-open. 2158.50 down here, the 3-month, and that's more important support. Let's bring in the breadth indications up to date here. This is the daily breadth indicators for New York. These two bottom indicators need to hold their levels, certain levels, to maintain a green reading on the pulse chart for the breadth, which we'll look at in a second. Net new highs 25. 5-day moving average in black needs to hold above 0, which it currently is just about. And the percentage of stocks in my New York list greater than their 50-day moving average, that number needs to hold above 50, which it is. And as I mentioned on the breadth chart, on the pulse chart here, our breadth indicator in the middle stays green as long as those two indicators hold their levels, which we're doing. We've lost some price momentum here. The price oscillator holding above 0, the trend remains up as long as that is the case. So at the moment the bottom two indicators are supportive, and you can clearly see at the top here how long it's been since we marked either green or red. Those colours derived from the profile, which we analyse each day, and they show, you could call it smart money commitment. When there's lots of green on the chart, you tend to get an upside bias, and the opposite if it's red. But you can see for a good few days now there's been a lack of that directional commitment, and we've been in a bit of a range here. If you're bullish, you obviously don't want to see any red or significant selling, especially below this level, 2158. But right now, towards the end of this week, we're looking for the E-mini post-open to hold 2177.50. Just going to run through the stock index charts and other charts. Some of these levels have changed and migrated. 216.33, that's the 3-month point of control for the spider. That is our first level support. Price printing time below that level would suggest a test of the major down here at 209.90. So we need to see 216.33 holding in the near future, with hope that minor point of control will migrate higher, possibly, or we see price breaking out of this range. Russell 2000 ETF IWM, big support on this chart is 115.35, that's the major point of control. A little lower than that we have a major half range, which we'll look at in a second. Currently we're pushing higher in price here, getting ever higher highs on the chart, on the price chart. What's a little concerning on a number of the charts is the divergence with the technical oscillators. Here we see the price oscillator, my price oscillator. You can see that on the momentum indicator here, as price is pushed higher here, we're getting what looks like a lower low on the momentum that often precedes a sell-off correction in an uptrend. For example, what we really want to see is the price oscillator at least holding above 0, which indicates the trend on the daily chart is still up. So pushing higher but losing momentum, we're seeing that on a number of charts. Looking at the Qs here, Nasdaq 100 ETF, one of the relatively better performers, stronger performers. Difficult to pinpoint any support of real importance above 105.13, which is the major point of control. A major will often be tested like here and be, very clear support, or If it is penetrated as in June, it will very quickly bounce back and quite violently. So we're looking at proven support here. Price back below that level would be indicating a real downtrend for the market. Obviously a lot lower than the current price. This is the UK's Footsie 100. First level support on this chart 67.23, that is the 3-month. Price above that in the longer time frame is strong price location. German Dax Index, this chart is interesting. If you look at the halfway point from last year's high down to this year's low in February, the halfway point is quite local to current price action, comes in around 10,550. If we see the DAX finding support here and turning back up, we have a higher low, which is often bullish, but we need to see that level around 10,550. We need to see that hold for the DAX. Price under here would indicate at least short-term weakness. Turning to the bonds, this is TLT, the Treasury Bond ETF. We have a 4-month at 139, which has emerged here, just emerged over the last couple of days. We're currently holding that, well, through yesterday's close. Futures actually indicate a lower open today. Ideally, this level here at 140.50, ideally we'd like to see price back above that. That's the halfway point, or the minor halfway off this year's high, and price above that level would indicate stronger price location and safer long positions. Looking at oil next, we'll look at USO, the oil ETF in a second. This is actually the light crude futures. September, showed this 2 weeks ago on the last video, and we identified this level here, this halfway point from this low to this high, and we said in a strong market this level would have a tendency to support, and I said that this futures chart was probably a more useful chart to follow for oil than the ETF. I said that price underneath that halfway point would probably confirm the weakness in the ETF and we'd see lower prices, but it's held and we've seen a really strong rally. First level support is now around 45.50, which is the halfway point off the high to the subsequent low that we've just seen. So to my way of looking at things, oil is back in a really strong price location here. And USO now back above 1078 in the 18-month, and that is first level support. Back in a strong price location. If USO is going to break higher here, I would definitely expect that 18-month now at 1078 to hold. Looking at GLD, the gold ETF, as of the close yesterday in a strong price location above its halfway point. The recent high, which comes in around 128, closed yesterday above that level. Strong price location. Cash indicates a lower open today. GLD needs to hold 128 to remain in that strong price location. This is the dollar index. First thing to notice is the halfway point at this level from this high to this low. Note that we're currently printing below that in a longer term time frame, and much rather see price back up here. Having made that point, let's just remove those quadrant lines just to let you know that the 2-year point of control has migrated down to this level 94.76. Dollar index is coming back a little today, but it is printing in a weak price location below that level. If I now add in the halfway point from this low at this point here, you can see that it comes in at the exact same level. That price, as we're looking at something like a bell curve here on the price distribution, that price may well become attractive, but price below that level is weak price location and dangerous. Short term, we definitely want to see price back above that level, 94.76, and to see some real strength in this chart, you want to see price back above this level here, 96.20. Okay, as the dollar index has moved into a weaker position, the Euro FX chart here moved into a stronger position. The 4-year point of control has migrated to 111.70. That's our first level support. The half range of last year's low comes in a little lower here. So this band should now be support if we're going to see further strength on this chart, possibly looking for a breakout higher if we can hold this level of, or this band of support here. See, this chart doesn't look particularly clear. It's actually a price distribution, very minor, 5-minute basis for the pound dollar. This is the Brexit over here, where the pound collapsed against the dollar. And we have this level now, which has shifted slightly. I'm just following the minor point of control on this 5-minute chart. It's now 131.37. Mark that on my daily pound dollar chart here. Again, we have something that looks like a bell curve on this chart. What I mean by that is if we start with the quadrant lines on the low here and we locate the halfway point, it's exactly on that minor point of control. So we have from this low here to this high here, we have something like this on the minor price distribution chart. In simple terms, it just means, from my perspective, that if we see price above 131.37, it's in a stronger price location. On the Aussie dollar chart, the major point of control is at spot 7650. Has been for a while. That's now attracting further time, and the 30-month has just migrated up to a very close level, spot 76.22. So this area of price is attractive. If we saw the Aussie dollar make a move like this, we would expect this level to be big support, and that would put it in a much stronger price location. Currently there's a bit of just a probe into that level. What I'm always looking for on a chart with a clear major like this is a very obvious higher low above that level. Ridex assets ratio, we're looking here at the sentiment indicators now. My version of the Ridex assets ratio hit a 7-month high recently at 7.74, which was just here. New 7-month high in the ratio is always worth noting. I also note that we have seen the ratio come off a little bit without the S&P making much of a correction, if any. Ridex traders are a lot more bullish right now than they were back at the start of the year. If the S&P pushes higher, a retest of that level, 7.74, would be really interesting from a contrarian point of view. This is the bull fund assets in isolation. If I just zoom in a little here, you can see that just a few days ago the bull fund assets hit their highest level this year to date. The AAII public poll, bulls percent was higher this week at 35.6, bears percent slightly lower at 26.4. We note that 3 weeks ago the 4-week moving average of net, that's the bulls minus the bears, exceeded the April high back here. So at this point it exceeded that level. I watched the 4-week moving average of net, that black line, with interest. It broke to a new high at this point. The level itself is not particularly high, but that is an interesting level of enthusiasm for the market. One scenario is the S&P pushes a little higher and we see this level clearly exceeded by that indicator. That would be interesting, with the Ridex at the same point pushing higher still. And we know that in the Investors Intelligence poll that we're looking at here, 4-week moving average of net again here has been moving higher. It's actually now at its highest since June last year. We're also seeing the exposure index at a really high level recently here. That's the equity exposure of active money managers, and 3 weeks ago the index reached its highest reading since November 2013. And the volatility index, the VIX, very low indeed relative to levels over the last few years. Closed yesterday down at around 11. Shows possibly a worrying level of complacency in this indicator. Okay, we're about 15 minutes before the open. This is the E-mini September. We're just holding that 2177.50. One scenario I'm looking at is the indices hold their current strong price location. We see a push higher up to about 2220 on the spider, and we see those sentiment indicators breaking out to multi-month highs as the public gets sucked back into the market. That's what I'm working with at the moment. Price below 2158.50 on the S&P would negate that short-term projection. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.